Welcome to the Traders Talk of XM, a monthly podcast where we talk to various people from the financial world about investing and trading. My name is Gil Paz. Today I have the pleasure of speaking with one of the most interesting voices in in global finance, Dr. Marc Faber. Dr. Faber is an economist, an investment advisor, and the publisher of the widely followed Gloom, Boom and Doom report, which I read many times in the past and recommend signing up for. I have followed Marc Faber since the great financial crisis, where he was regularly interviewed on Bloomberg and other news channels. In many ways, he shaped my love for fundamental analysis, which he actually don't know that. I love his controversial comments, his bold analysis, his criticisms of central banks' policies, and his contrarian approach to investing. For example, he's one of the few advisors that still recommend diversifying in gold. Whether you agree with him or not, he's always challenging conventional thinking. Marc Faber, thank you so much for joining me. It's an honor to have you here.
Well, thank you very much for giving me the opportunity to express some of my views.
As I said in the introduction, I was following you for so many years, and really, the things that I'm doing often relies on the thoughts that you had in the past. And so it's really very, very special for me to have you here. I will directly start with my first question. And the first question is, in the last decade, the world was dominated by monetary policies, the financial world. And after the great financial crisis, central banks became superheroes. They saved the world from finance. At least this is how it's published. But it seems now, since this year, and since the Trump administration, this changed, and suddenly fiscal policy become more important. Do you agree with that thought?
Well, I mean, I think in every society that is developed, we have the government, the bureaucracy, and then we have central banks, which is a relatively new invention, because prior to the 19th century, we didn't have central banks. And then we have the fiscal policy that has always existed in history. In other words, governments, they collect somehow taxation, and then they spend money on the army, on infrastructure, and in recent years, this is also a new invention on social security. In other words, the governments increasingly in Western democracy has taken upon itself to satisfy the needs of all sorts of people in old age, and people who have children, and people who are disabled and so forth. And so the government in Western societies, particularly Western Europe and the US, if you look at the last 150 years, in 1900 and 1910, no European country had government expenditures of more than 12% of GDP. And nowadays, it's around 50% of GDP is the government. And the trend is clearly more government and more expenditures. The problem is that nobody wants to pay tax. And in Western societies where we have democracies, it's very difficult for politicians to go to the people and say, look, we live beyond our means. We need to increase taxation. These people who would say that and talk and say the truth and express the truth, they would not be elected. Mm-hmm. And so we have these deficits, and that becomes burdensome at some point when interest rates no longer go down but are stable or are increasing. And the deficit is, of course, inflationary. especially if it's accompanied by easing monetary policy. And therefore, the inflation then eats away at incomes of people, and the prices go up, and goods and services become less affordable, and the economy doesn't do well. There is a money illusion where people think, oh, the economy is good because the stock market goes up. The reality is that the majority of people has diminishing standards of living. That is very clear that over the last 20, 30 years, the standards of living of most people, I'm not saying everybody, the rich people, the 0.01%, they benefit from inflation. But the majority of people, the typical household in a society, is being hurt by rising prices.
So, would you say that the Trump administration, at least in the beginning, they understood this problem of overspending and also of that people don't like taxes, so they came up with an alternative. On one side, they introduced Dodge with Elon Musk in order to save spending, and on the other side, they came up with the tariffs. They said, okay, we can't put taxes on, people don't like it, so let's put tariffs on, and this is how we increase income. And so is it possible to say they recognize the problem, they try to solve it, but somehow it got out of control?
Well, I think that every government knows more or less what the problem is, and they would all like to find a solution, and they know that basically the deficits are inflationary, and artificially low interest rates are inflationary, and so forth, and they presumably also understand that the tariff is nothing else but a tax.
Mm-hmm.
It's just a consumption tax, and it hits the poor people more than the rich people, because poor people spend more on imported goods than the rich people as a percent of their income. So it's a regressive tax. And the rich people, they import a lot of goods, but they buy the goods, say, in tax-free havens like the Cayman Islands or Bermuda or, wherever. And then they don't register them in the United States. So they own a private plane, which is registered in an offshore company, or they own a pleasure boat in an offshore company. So they don't make the same contribution in terms of tax payment as a poor person as a percent of their income.
Mm-hmm. And
But it's nothing new.
yes,
Wealthy people in general throughout history have not paid much tax.
because they find loopholes how they can avoid it, right?
Yes, including Marc Faber, who lives in Thailand.
Yes. So to go back to the administration, so they introduced tariffs. Will now that they paused it, it seemed like after they introduced tariffs, it got out of control. The interest suddenly, long-term interest started to rise after they introduced the tariffs, and also the dollar started to fall, and somehow they stopped the whole concept of the tariffs for 90 days. But now, today exactly, those 90 days are over. Will the tariffs come, or are they just threats at the moment? How do you see the tariff story will evolving from here?
Well, I mean, I believe that Trump and his administration is sufficiently ignorant about economics that they will introduce the tariffs. Trump and his people, his team, seem to believe that tariffs will help make America great again. This wouldn't be my view. And economically speaking, we have sufficient evidence that free trade is beneficial for everybody in the long run. You understand? The protectionists, they will argue that American labor has been hurt by cheap imports of steel and aluminum and copper and so forth from the rest of the world, and textiles and Nike shoes and so forth and so on. But in economic developments, countries shouldn't aim at producing cheap goods. They should aim at producing value-added goods that other people can't produce. And so my view is that we have sufficient evidence that free trade leads to a general improvement in the prosperity of people worldwide. I mean, if you get the Chinese to increase their prosperity, their standards of living, then they buy wines and they buy wood and they buy resources and so forth. And they buy watches from Switzerland and wines from France and cognacs from France and whatever, and cars and so forth, and Ferraris and Porsches and so forth. So, I mean, I'm not saying that the opening of China did not lead to some discomfort in some industries. But I'm suggesting that if the steel industry kind of died out in America, it was largely because of very high cost structure, the union movement, excessive wage growth in the 60s and 70s that made producing steel in America not particularly productive or competitive, and that there are other factors that were much more important than just, say, cheap labor. I mean, the trade deficit of the U.S., they will argue, is because of cheap labor in China. This is, of course, ridiculous. Labor costs in China are not that low anymore. They're low and lower than in the U.S., but the Chinese industry, by and large, is much more productive than the American industry. I mean, if you go to China and you look at how they produce goods and how these goods are shipped to the port cities and out on ships in containers to the rest of the world, I can tell you it's very difficult to duplicate that. And in my view, if the aim of the policy of Mr. Trump is to produce again Nike shoes in the US, he's crazy. He's out of his mind.
So actually, what you are saying is, in place that you are suggesting the United States, in place of being protectionist, they should embrace the free world, the free economic world, and competition, and they should be more productive. If they want to bring manufacturing back to the United States, they should be more productive, more efficient. But they probably can't.
Well, the question is, Trump, he always says China and Japan and all these countries ripped us off. Well, I mean, if you look at the world, quite frankly, who ripped off whom? I mean, I'm happy, not that I buy a lot of sneakers. I'm not a marathon runner. I drive motorcycles. And I suppose soon I'll be in a wheelchair. But you understand, I think the world should be very happy that someone was working long hours at low wages and produced the sneakers at low cost, which enabled a period of disinflation to occur. The inflation rate, as you know, accelerated in the 60s and 70s and peaked out in 1980. And thereafter, inflation, the growth in price increases diminished. And that allowed this disinflationary environment, which permitted interest rates to come down and asset prices to go up. So if I look at the world in 1970 and today, say in 1970, China, India, Vietnam, and so forth, they were not a factor in the global economy. And I can assure you, the moment all these countries who were communist and socialist went and adopted the capitalistic system and the free market demands free trade.
Mm-hmm.
Why would anyone say the free market is good, but free trade is not good? You understand? New York or say Toronto could say, oh, we need import duties because we have a trade deficit with the agricultural sector of Canada. Of course, they have a trade deficit.
Mm-hmm.
But they have a surpluses in services and so forth. And if you studied history, the Middle Ages, every bridge had a toll. To cross a bridge over a river, you have to pay. And every road, you had to pay to go through it and so forth. This led also to the formation of Switzerland, because the Swiss didn't want to collect the tax for the Austrian emperor.
Yeah.
Anyway, the discussion, I studied economics and mostly financial policy and taxes. And then I wrote a thesis for my PhD in England about the financial reform of Robert Peel, because in 1842, England repealed the Corn Laws and they repealed the Navigation Acts. These were typical protectionist measures. What subsequently happened is that the prosperity of Britain increased, but of course the rich people that owned the land, they had to now compete with imported agricultural products from Australia and from Canada and from the US. And so the landowners, the aristocracy, they suffered.
So
The rich people, the feudals, the lords, and so forth, these are the people that were hurt by free trade. But the population did benefit. And you see, in America, the standards of living began to decline largely because of government regulation. Largely, I'm not saying only, but largely.
So you're saying what they actually should do, especially as the Republicans should be for capitalism, they should not introduce barriers, but they should reduce them in order to make a more competitive world. But then again, we still have the overspending, which the national debt. So another question. So I go to the next question here. The national debt of the United States is at its peak at the moment. Is this sustainable, or should this be addressed? Otherwise, it creates a catastrophe. That's actually what many economists say, right? The national debt is too high.
Yes, and it will under Trump, the deficit will go up and not down.
Mm-hmm.
This whole Dodge story was complete BS. He just wanted to say something, that like he is a populist. He wants to be popular with people. And it appeals to the population to say, okay, we're going to cut government and so forth. But the fact is simply in democracies, people who vote, they love subsidies. They love old age insurance. They love social securities and so forth and so on. They love everything that then creates inflation. But inflation, which is the cost of living increases, that they hate. But what creates inflation, that they love. And the government consists of bankers. These people have not the courage, they don't have the courage to cut expenditures. Because the special interest group, if they cut this, a wealthy guy calls up Trump and says, look, it's going to hurt my company, it's going to hurt my business. Then the other group of that industry, they will call him up, oh no, this will hurt us, we can't give you the contribution if you do that, and so forth and so on. So they scrap it. Musk, he wanted to cut costs, and he was about to do it, but then they cut him off.
And that's now the battle we have between those two. Elon Musk, who is so disappointed, I agree with you. I think he truly believed that there is a bold government coming in, that they will succeed cutting expenditure, and the disappointment is very big from him now.
Well, he was naive to believe Trump. Trump has never kept his word about anything.
Mm-hmm. So, yeah. So,
and the best joke is that Trump, whose companies have repeatedly gone into financial difficulties because of excessive leverage, because of excessive debt, that people believe that he will reduce the debt and the deficit. No, Trump will increase the deficit, will increase the debt, and that is why he's so keen to get rid of Powell. I mean, I have zero sympathy for central bankers. But in this particular case, I think that Powell is right, that a cut in interest rates at the present time wouldn't be very helpful for the United States.
do you think he can withhold the cuts, or will they start in September?
I suppose they will start in September or start. They started already a year ago. I mean, not exactly a year ago, but in September 2024, they slashed the Fed fund rate already. So we're down. But as you pointed out, Milton Friedman, he explained this very carefully. The Fed does not control interest rates. They control short-term rates. They can set the Fed fund rate, which is now at 4.25% or thereabouts. They could slash it down to 1%. They can do that. The question is, what will the reaction be of the bond market? And what will the reaction be of foreigners who own US dollars. I mean, I own US dollars because I get an interest that is far higher than I would get in Thai baht, where I live in Thailand, or in yen, Japanese yen, or in Swiss francs, or in euros. I can give you the whole list of interest rates. I watch it, of course. But as you pointed out, the dollar became weak.
Is the dollar weakness? So here, this is my theory. I would like to hear your feedback on it. I believe the dollar weakness has to do, especially now in the last couple of months, has to do with the fact that the Trump administration uses the dollar as a weapon, and countries like China, they start to realize, like you can be sanctions eventually, and they realize that it's a threat to have a lot of bonds, and so they start to sell US bonds and buy other assets, like gold, for example. Is this a possible theory?
Well, my view is the Fed and the Treasury Department have never been particularly concerned about the value of the US dollar. For them, a buck is a buck. You know, the dollar is the dollar. And then we're the greatest country in the world, and we're the exceptionalists, and so forth and so on. In general, I think the view in America is, of course, that a strong dollar has great advantages for the United States, because as long as the dollar is a desirable currency, as long as foreigners trust the dollar, there are less inflationary pressures, and the U.S. projects power internationally as long as the dollar is strong. You understand? The Americans is a world empire. They have 250 bases, military bases around the world. And then they accuse China of being aggressive, and they accuse Russia of being aggressive, when they themselves have military bases all over the place. But in general, I think the policy of the government is, or they view the strong dollar as being favorable and the weak dollar as being less favorable. But under a protectionist government, such as we have now, Mr. Trump may view a weak dollar as somewhat of an advantage in bringing back manufacturing to the U.S. It's, of course, a fallacy. I specialized already in the 70s and 80s in emerging economies. In general, countries that had protectionism and a weak currency, they didn't attract foreign investments. There are many other reasons, but say in the 70s and 80s, for most of the time, Latin American currencies were weak, and capital investments into Latin America was weak. Whereas other countries that had strong currency, they attracted capital and investments and so forth. So I would not conclude that the weak currency is of any advantage. And then we have to analyze, why is a currency weak? Yeah. The currency is weak because of domestic inflationary pressures. That leads to a weak currency, and in turn, the weak currency, especially if the country imports, let's say, resources, leads to more inflation, because the prices in the weak currencies go up more than the prices in a strong currency. But these things are difficult to understand for someone who is not well, say, educated in economic matters, because you can easily say, oh, we have inflation because the currency is weak. No, the currency is weak because we have inflation. That is the cause.
Yeah.
But temporary, short term, it is possible that the currency weakness adds to inflationary pressures.
I understand. By the way, we have many, including me also, currency traders. So traders here at XM, they trade currencies. What would you say is a reliable fundamental indicator for currencies?
Well, I tell you, I ran brokerage offices in Hong Kong and Singapore. And in the 70s, we had day traders come to the office during the night and trade currencies and gold and silver and copper and oil and so forth. I have never met anyone who in the long term made money. Not one. Not one. And in the crash of gold and silver after January 1980, there were huge losses. And then in 87, a lot of people were wiped out.
Yeah.
Wiped out.
Yeah, it's true.
I tell you, you know,
just a second.
I don't know anyone who's been consistently right about currency movements.
Okay. So
with stocks, people say, oh, the stock market will go up. I can understand in a money printing environment. Of course, stocks go up in the long run. You can have setbacks, but you print enough money, then properties will go up and stocks will go up. But as you know, there are setbacks that can be very significant and long-lasting.
That's true. I would say following. Again, I am trading often currencies, not only, but often. And I agree with you that forecasting is quite a difficult thing. But I would say also a lot of things changed since the 70s and 80s in currency trading because there was really little knowledge about what moves currencies then. And the world wasn't free before 72 and Bretton Woods. There wasn't actually free flows of currencies. And in the 70s, currencies were very unknowable. How they move, what makes them move up or down. And therefore, yeah, it was just a random walk. I would say today in 2020, 1020s, there is much more knowledge about what moves currencies. And you can see currency trends continue for a couple of years. So, for example, we just started to see a decline in the US dollar, but we had before a decline of the yen for a couple of years. And so there is structural things and trends that can continue for a couple of years, which makes them actually quite interesting to trade. But that's my opinion.
Yes, so you tell us which currency I should buy for the next 5 or 10 years. Tell me which currency.
So I will say currencies.
Just give me a name of a currency that I should buy for the next 5 to 10 years.
So in general, currency is not a good store for value because currency decline in general.
I wrote a report in November, or at the end of November, I said the Trump top. And it is true that the stock market right now is making new highs in dollars.
Yes.
But it's not making new highs in euros and not in Swiss francs.
Yes, you're right.
And not in gold terms. So money printing can actually keep, assets up. But what then happens is the currency goes down frequently, or always. So in real terms, the stock market is down now something like 15% from the peak in November.
Mhm. The US
And I
stock market,
suppose-
right? European markets
Yes.
are up.
Yes, but the European markets, we have to look at the context. Since 2009, 2010, the market bottomed out in March 2009. The S&P, by the way, on that day, it was at 666.
Unbelievable.
And since then, the European markets have grossly, I repeat, grossly underperformed the US, okay? And now, of course, last year and also this year, they have begun to outperform the US. So when you're telling me about stocks being higher in 20 years' time, I don't know, maybe, and some stocks will be higher and some stocks will be lower.
Yes.
You know, in America, if you look at the automobile industry, I can't say that they've performed well over the last 30 years. No, they haven't.
Yeah.
Actually, they had to be bailed out by the government, and that created deficits and inflation. So there are lots of things that we don't know. But one thing I'm quite certain about, relatively speaking, and absolutely measured, I suppose that precious metals will keep their value, their purchasing power. I mean, if I look at, say, gold, I remember $35 an ounce in 1970.
Yes.
Then the closing of the gold window by Nixon in August 1971. I remember this because I was writing about it a day before it happened. And then everybody thought that White Weld, the company I worked for at the time in New York, that I was a currency expert. Yeah, compared to Americans, I was maybe a currency expert because we had a professor in Zurich who argued about flexible exchange rates. But the point I want to make is a lot of things can happen, and gold has more or less kept up its purchasing power. Now, I have to say, if you owned the Dow Jones in 1970,
Mhm.
and you got the dividends and you reinvested the dividends and so forth, you had a very high return, higher than gold.
Yeah.
But then comes the cost of the fund manager. It depends how you keep your things. You understand? And the cost of the brokers, the friendly brokers who tell you to buy this and then that and so on. There is a reason why trading houses like Citadel and so forth make so much money. You know, there's a reason. It's called front running. Front running.
I understand. So,
Anyway, but I would advise anyone who has assets or who is young and earns money. I mean, my grandparents in the 50s, there was no inflation. The home prices in the 1950s hadn't gone up for 30, 40 years in Switzerland. And I said, Marc, you have to earn money, and you take 10% of your salary and you put it in a Kantonalbank, a savings bank in Switzerland, government sponsored and so on. That idea was a complete disaster because the Swiss never paid any interest to speak of. And there has been in Switzerland a huge loss in the purchasing power of money, a huge loss. I mean, a house that was worth, say, 100,000 40 years ago is today worth millions and millions. And there's a reason why young people do not have enough money. The affordability of buying a home nowadays, also in Canada, is very low. And if you look at the statistics, the housing market has been strong until recently. Now, recently, home prices and condo prices in Canada are down.
Yeah.
But the young people can't afford them because their salaries haven't gone up to the same extent. Home ownership affordability in America is at an all-time low. Not my invention. These are statistics that Goldman Sachs calculated. They have no reason to say that this affordability is low. They want to have clients that buy stocks, not to turn them negative.
My daughter, she's 18, she told me, you know, that this generation can't buy houses, so you have to buy me a house. So I can, and I have to somehow
I'm
agree
glad
with
I'm
you.
not alone. I'm glad I'm not alone.
Yes, so this is really true. Maybe as a final question, we have only 2 minutes left or so, or we have to. We talked about the Fed when they will cut interest rates, and they probably will start in September. The final question maybe is, when will they start to print money again?
This is a very good question. And I'd like to make this very clear to all your viewers. The fact that interest rates go up is not the sign of monetary tightening.
Mm-hmm.
Believe me, if money was tight, the stock market wouldn't make new highs. There's plenty of money floating around. There's no tight liquidity at all. On the contrary, in my view, the interest rates today is very low. Why? Because the cost of living increases are more than 4% per annum. Say, the US 10 years Treasury is yielding now 4.3 or 4.4%. The cost of living increases is more than 4%. Not what the government will tell you.
Yes.
But as an investor, the first thing I would learn that every word that comes from the government is a lie. They are not shy about lying to the people they look after as a government. The government has nothing to do with the people. The government has to do with themselves.
I understand. So
But the problem is that the governments can change. The people who vote for them don't change much. That in Canada, they could have someone like Trudeau running the country is a mind-boggling thing. That I will never understand in my life. I always used to say, because I traveled to Canada every year, maybe 5-6 times from the US, I always told my friends in Canada, when I travel from the US to Canada, it's like going from hell to heaven. Because Canada is a nice country. It was a great country. And what did they do, these nice Canadians? They voted for Mr. Trudeau. A completely incompetent and lack of knowledge person.
yes, I understand. We have to conclude this already. Look, for me, it was an amazing pleasure. I would maybe also take from what I got from you also. I got many things insights, but that maybe the 10-year bond yield is the most clearest reflection of how the market is doing. Not the short-term interest rate, but the long-term interest rate.
Yes, I think that is a correct assessment. And of course, the value of the dollar.
Mm-hmm. And the value of the dollar. Wow. Marc, thank you so much. Really, it was a pleasure. And again, I was looking forward for this talk for a long period of time. I know this is already late in the evening for you. So
No, it's early. I just got off. I work at night.
Thank you so much. And I hope to see you soon again.
Okay, thank you very much.